At the age of 11 years, he made his first investment, buying 3 shares of Citi Service Preferred at $38 per share. The stock quickly dropped to only $27, but he held on tenaciously until it reached $40. This is how the most successful investor of the globe started his journey. He then became the richest man in the US with a net worth of $105.9 billion. He is none other than Warren Buffett, the ideal for investors across the globe. His moves are watched and followed by those who wish to gain profits through investing in the share market. His piling up of cash holdings has again brought him limelight and a subject of debate among the investors, analysts, and other stakeholders. Hello everyone and welcome to our channel Money Invest, and today we will be discussing Warren Buffett's advice on why one should not hold a lot of cash, and also we will discuss how and why he has piled so much cash. We will be taking a look at the possibilities of Warren Buffett using his cash pile. Before proceeding further, make sure to subscribe to our channel. Also make sure to press the bell icon so that you don't miss out on any of the awesome content. Now without any further delay, let's get started. What is the major perspective of holding cash? Or what are expected returns for holding cash? The expected returns on holding cash are getting deteriorated continuously due to increased inflation rates, and on the other hand, the interest rates of banks are already down enough to expect yielding high returns. So long-term holding of a lot of cash is not a wise idea. Warren Buffett once said, "People who hold cash equivalents feel comfortable. They shouldn't. They have opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate." Buffett also expressed his viewpoint about cash holding as, "The one thing I will tell you is the worst investment you can have is cash. Everybody is talking about cash being king and all that sort of thing. Cash is going to become worthless over time, but good businesses are going to become worth more over time." But despite all these, it has been reported that Buffett's Berkshire Hathaway is selling their equities for the 4th straight quarter. The company has reported a stock repurchase of only $700 million in the last quarter, which is far less than expected by the analyst. The company has ended up selling $2 billion more in stocks than it purchased during the period, adding to the cash pile climbed to a record $149.2 billion. One significant entity to be disclosed here is how the cash pile Buffett has increased. Cash is rising, so much in one avenue, which happens to be buybacks. It's not acquisitions, but it's being spent productively. It's so much better than the alternative of seeing that cash stabilize or decline without other large acquisitions. Berkshire's sales appear to have largely come from cutting holdings in banks, insurance, and financial investments, according to its 3rd quarter regulatory filing. Buffett said, "We are investing, but cash is a holding position until you find something else. But the very fact that interest rates are low makes it hard for us to buy other things because other people buy things with borrowed money, and borrowed money is so cheap." The big issue here is that Berkshire was a net seller of stocks against this quarter. Jim Shanahan, an analyst with Edward Jones, said in a phone interview that's the primary culprit of a cash pile continuing to rise. The question arises, why Warren Buffett, who himself describes cash as a terrible long-term asset, is sitting idle on the mountain pile like a pile of cash? The question why is disturbing the investors, analysts, and followers of Warren Buffett. Folks, check it out if we'll get any color from the investors on what they'll do with that. The situation is creating a lot of buzz in the market and everyone is speculating the next move of Warren Buffett. Let's investigate the possible causes. The first important point to know here is this is not the first time Warren Buffett is holding a large amount of cash. Berkshire Hathaway, led by Buffett, has a long history of holding vast amounts of cash. The only difference is that the cash holding has reached a record highest this time. Buffett views cash as a safety net in case there are challenges among Berkshire's equity holdings. Warren Buffett once said, "We never want to count on the kindness of strangers to meet tomorrow's obligations. When forced to choose, I will not trade even a night's sleep for a chance of extra profits." The pandemic has forced many giants to extend their cash pile, including Buffett's Berkshire, Amazon, Google parent Alphabet's, American Airlines Group. Analysts had already predicted health crisis would lead to some acquisitions. The sprawling conglomerate has benefited as many of its vast array of business bounced back from the initial losses of the pandemic, which helped boost operating profits by 18% in the 3rd quarter. Berkshire's railroad generated record earnings even as the industry grappled with the supply chain pressures, while the company's energy business posted their highest profits in data going back to mid-2009. Buffett's company was helped by strong consumer demand for products, but warned in its report that several of our businesses experienced higher materials, freight, and other input costs attributable to ongoing disruptions in global supply chains. Its collection of manufacturing, servicing, and retailing operations posted the third highest level of profit in data going back to the middle of 2009, an increase of 15% compared to the year-ago period. Even though the operating profit rose 18%, but missed analyst forecasts a resurgence in COVID-19 cases fueled by the Delta variant of the coronavirus caused goods shortages and crimped consumer spending, while damage from Hurricane Ida and European flooding boosted underwriting losses at the Geico car insurer and other insurance units. Regardless of all these profits, why Buffett has chosen for a mass cash piling? The first possible reason could be soaring. The share market has led Mr. Buffett to extend his selling streak for 4 consecutive quarters, which indicate that Mr. Buffett's company has struggled to find bargains, with the share market hitting record high. When everyone is saying, "Can't believe they have $145 billion in cash and they're not doing anything, why don't they do something?" But Mr. Buffett is just so blindly indifferent to those cries from the crowd. And Warren just says, "We're not paid for activity, we're paid for being right." Buffett has struggled with the high-class problem of having too much money in Berkshire's pockets and not enough chances to put that to work in higher-returning assets. With no major deals in recent quarters, Berkshire's chief executive officer has frequently turned to buybacks as one way to deploy the cash deluge. But even the heightened level of buybacks during the third quarter wasn't enough to keep Berkshire's coffers from swelling. The second possible cause may be Berkshire's cash pile has likely increased in recent months because of a lack of buying opportunities in the current bull market. But on the other hand, it can also be assumed as preparedness towards deployment for an expected market correction, resulting in high-quality companies being traded at more attractive prices. When Warren Buffett was asked, "Just please help me understand what I missed. Why didn't you use more of the cash at hand?" he replied, "Just hasn't done anything yet because hasn't found anything that is attractive. Trying to time the stock market is impossible. Therefore, trying to work out when the current bull run will end is unlikely. To allow allocating capital efficiently, a lot of cash in hand will help to strengthen the portfolio's performance ahead of a potentially uncertain economic period. As Buffett once said, predicting rain doesn't count. Building the ark does." The third important possibility is, it's being heard from Warren Buffett touts this elephant-size acquisition he's been looking for some time. Warren Buffett doesn't inherit a big pile of money. He builds his fortune by picking really solid businesses that generate a lot of cash. The kind of businesses that Buffett is interested in investing, they're cash powerhouses. Things like insurance, banking, consumer products, pharmaceuticals, these are all things that hold up well, even in the absence of a big attractive acquisition that could move the needle. It would be interesting to see if he's got his eye on something now. So really big. So what's the message for the investors in the current strategy of Warren Buffett on cash holding? Buffett's current strategies have suggested a bear market on hand shortly due to expected market corrections as a result of the continuous bull market. The investors might tempt to hold more cash in hand, but deciding how much cash to hold within a portfolio is highly subjective. Some investors may choose higher cash balances in anticipation of the next bear market and the buying opportunities it may bring due to mispricing. Meanwhile, other investors may determine that rising inflation is pushing them towards a more fully invested profile. The financial flexibility and peace of mind that cash in hand offers means that, while determining the extent to which it is held is not an exact science. So as an investor, one needs to be cautious before deciding whether to follow Buffett's strategy or not. But one thing is for sure, some big ups and downs are on the cards. And that's all for today's video. Make sure to like and share the video and subscribe to our channel for more interesting content. See you soon with another amazing video, and until then, goodbye.